Warren Buffett is arguably one of the greatest investors in the world. As of this point in time, I think he holds around 235 billion US dollars worth in stocks plus the 120 plus US dollars that he has in cash. In this video, I want to focus on and I want to talk about what are the companies that he's holding and why is he buying those companies, and as of this point in time, why does he still own them? That and more if you want to be a good investor in the market in this video. So check this video out. Hi everyone, this is Marvin Germo. If you're new to this channel, please subscribe and smash that bell so you get updated every time I create new content about the stock market. So we just hit 60,000 subscribers today. I'm excited for more. I'm excited that as I've been doing this, there's more and more people that are enjoying the content, learning about trading, learning about investing, learning the rudiments and how they can be financially free. So the road to 100,000 is right underway, and thank you so much to all of you guys who have been subscribing, have been watching, and have been liking. So enjoy the rest of the video. Hey guys, so we're back with our educational series. We're back again with me breaking down certain philosophies on investing, on trading, on key personalities, key people that have influenced me. I've created a video already on Ray Dalio, but we're gonna make more over the next few weeks and months. I created also another one on why Warren Buffett has a stockpile of cash right now. But I want to focus on that it's not just about the cash that he has, but what is he currently holding. I'm going to mention this in the video that these are not just stock picks. Please remember, these are not picks. You also need to create your own foundational understanding on why you need to buy a stock. But what I want you to get from this is, if Warren Buffett is buying the stock, what's the logic behind it? Why is he buying it? Why is Berkshire Hathaway positioning in it? And what I want you to also see in this is that, please remember, it's not equally weighted. People always think that when you invest in stocks, it has to be equally weighted. No, it does not make sense to equally weighing your stocks. You have to place a greater number, a larger position on stocks that you know will crush it. You need to place a greater position on companies that you know will outperform and do better. Then put a little on some stocks that you know are good, but you believe won't perform as much as compared to the ones that you have high conviction in. So at any point of this video, if you are enjoying, comment I want more so that I will create a different set of videos also for you with this type of approach as well. Hey guys, so in this video, let's talk about Warren Buffett's portfolio, how he has constructed it over the years. Please remember, this is a snapshot just for 2019, just over the past few weeks. Disclosure, he had bought and sold several stocks also in the past. So this is just a snapshot of what he has done just as of this point in time. So if you guys like videos like this, allow me to make more of this. Just comment below as we can make an ongoing saga of how Warren Buffett does his portfolio construction as well. Please remember, this video is not really for traders. It's more for investors. This is more for people who want to buy good companies that are growing and are undervalued and want to hold on to them until the fundamentals still remain intact for a very long period of time as well. And please remember also, this is not stock picks, but this is me basically giving you the logic and the principles behind it so that you can replicate it as well for your own portfolio, or you can replicate it also in other markets as well using the same ideologies as what Warren Buffett is having. Because please remember, it's not just about what they're buying, it's about the logic behind it. Because if you know the logic behind it, you can repeat it and you can replicate it and you can be successful in your own way. But in the same note also, since this is something that they're currently holding, you can also get an assumption already on the rationality of why they're buying it. The only question is, since they're good companies, you might have to come in at a price also that's also cheap. So you have to look at those valuation ratios if you want to also just emulate what Warren Buffett is buying as well. Just a quick plug, by the way, this will be my last stock sports for the year. This will be in December 7, 8, and 14. all in SMX Aura. The details of it will be in the description, or just comment Stock Smarts Manila if you want me to send you the link on how you can register. The whole goal of this session is basically just to teach you how you can trade the markets with confidence, how to time it using technicals, or how to select and nitpick stocks that are good and avoid the ones that are bad using fundamental analysis. And if you want to know also how to compute for the value of the company, that's what we're going to talk about as well during our fundamental analysis course. For those who can't attend those live training sessions, I have 5 books which spans technical and fundamental analysis, also the basics of stocks as well. They're in the link below. You can they're in the description. Just look for the link that says Shopee, and you will be directed to how you can get a copy of the book. Now let's go to the meat of all of this. First things first, Warren Buffett owns 28 companies. Please remember that. Now, that being said, if we will try to study all 28, it wouldn't make sense because they're not equally weighted. When I say they're not equally weighted, there will be some stocks that have a higher allocation, massively larger amounts of allocation, meaning Warren Buffett has a high conviction on those stocks. That's why they're putting more and more and more positions into it. And there will be some with very, very small positions, meaning in the overall portfolio, Warren Buffett may not be as bullish about them as compared to the other stocks that he actually bought as well. And in the grand scheme of things, since they're so small in the portfolio, any move by that stocks may not actually affect or actually bring the portfolio up or down because they're just below 1% in terms of allocation. So the reason why I'm saying that is basically the top 7 companies of Warren Buffett already comprise 74% of the portfolio. So if you know the 7 companies and you know the logic, you know the reason behind it, or if you want to copy it, this will already somehow mirror the companies that he would buy and the rationale behind it as well. Please also note this, not part of the top 7 companies, something that I'm so interested about. I'm a big fan of Amazon, and Warren Buffett not suddenly, but over the past I think it was just this year or last year, he started to buy Amazon as well. If you remember the previous outtakes that he would have more than a decade ago, he would say that he doesn't like tech companies because he doesn't know where tech companies are headed. But now he's sort of changed his stance in the same way. Also, he didn't like airline companies before, but part of his portfolio now, he has a lot of airline companies. But again, smaller positions in the overall stocks that he has. Anyways, the first stock that Warren Buffett has the largest, massive allocation is Apple. Warren Buffett owns 28%, or Berkshire Hathaway owns 28% of Apple. Imagine almost one third of their position is just Apple, and this is already post Steve Jobs. He's not buying it just because of Steve Jobs. He's basically buying it because of quality of the products that Apple has, because they're so good that people just keep on buying them, and because they're not really priced cheap. The margins on the products are high, and because Apple has an amazing brand loyalty that when they release something new, from the watches that they make, from the phones that they make, the laptops that they make, people will just flock and come to them. So that could be a technique also, that could be a narrative of how you buy. Look for companies with amazing brands, because normally the ones that have large brands have larger margins, and because they have larger margins, they have the ability also to produce it better. So that's what we have for Apple. Apple is one of the greatest brands in the world. Berkshire Hathaway owns 65 billion US dollars worth of Apple, and they own 5.6% of the company already. That's how big of a position they have in Apple. Stock number 2, Bank of America. It's 10.5% of their portfolio, and they own 31.7 billion US dollars worth, and they own around 10.5% of the company. So Warren Buffett has been buying Bank of America since 2011. He continues to buy it up until now. One of the reasons why he's buying it, and this is a team, over this top 7 stocks, there will be a lot of either banking or financial services companies also. But apart from this, outside this top 7, he still has some companies connected to it, like JP Morgan, which is also part of Visa, which is also part of the financial service industry, which is not part of the top 7. But one of the reasons why he's buying it is, number 1, Most of the banking stocks, most of the financial services companies, as of this point in time, are relatively cheap. It's priced relatively cheap. Secondly, is that's his core expertise. That's what he knows. That's what he's already good at, and that's what I keep telling people as well. You always just find stocks that you are good at, you are an expert on, because since you are an expert in that industry, in that company, in that field, it somehow will protect you because you know the underlying fundamental movement of the company over the next few years. Stock number three, and this is something that I've been sharing over the past few years already because I'm also a fan of this stock. Please remember, similar to Apple, Coca-Cola is an amazing brand. And Warren Buffett has been holding on to this since the 1980s already. So Coca-Cola is 9.13% of the overall portfolio of Berkshire Hathaway, and they own 21.5 billion US dollars worth of it, and they own 9.3% of the company. What's interesting about Warren Buffett though is this. He actually said no that he will never sell a share of Coca-Cola in his entire life. He has never sold a share of Coca-Cola, and he will never sell a share of Coca-Cola. But one of the things that caught my attention was this. One of the reasons why his positions in Coca-Cola continue to grow is basically when he gets the dividends, he has enough patience not to use it, but not just use it, he waits for a proper time when it becomes cheap for them based on their parameters that they start buying. So the value of Coca-Cola, of Berkshire Hathaway for Coca-Cola has improved massively or has increased massively, not just because they bought properly, but also because they just kept reinvesting the dividends. So he bought Coke, and this is similar to Apple. No, Coke is an amazing brand, and because it has such an amazing brand, no matter who comes in to try to fight them, no matter who comes in to try to beat them, Coca-Cola will always beat the competition. So comment below if there are any other stocks that you think that has the same amount of brand, that whoever is the competition that will try to attack that company, attack that brand, that competition will always be just second place. And that's what we have in Coca-Cola. If you find companies that whoever will compete with them will just be a very far second, that stock is a very good company to hold for the long term. What's interesting to note though is also this. Warren Buffett bought Coke at 2 pesos, 2.5 US dollars in the 1980s. The dividends that he would get right now is 1.56 US dollars. So the dividends that he gets is almost close already to the cost of acquisition. He's getting around 60 to 70% already just by dividends alone from the stock that he actually purchased it from. So that's why I've been harping on it over and over. You can look at the dividend playlist here in this channel that I've been talking about. Just keep on focusing on stocks that have dividends, because as the company does better, the dividends will also increase. And it's a safety net for you, because companies that are doing well normally give dividends. Companies that are not doing well are not giving dividends. So if you're not satisfied with the dividends anymore, the dividends continue to drop, you can just sell the stock as well. Number 4, Wells Fargo. Now we have another bank as well. This is the second bank out of the top 7 stocks that Warren Buffett owns. It's 8.90% of the entire portfolio. They own 20 billion US dollars, and Berkshire Hathaway owns 8.9% of the entire company. Similar principle, similar narrative on why they're buying Wells Fargo is because, similar to Bank of America, Wells Fargo is also cheap. The forward PE ratio of the company, of the bank, is at 12 times PE. So again, same narrative. Buying it because it's cheap, but not just that. Buying it because that's where their competence is, or that's where their competence lies. Stock number 5, which is still in the financial services industry, American Express. For all of you guys who love to travel, especially business travelers, American Express is one of the most solid and trustworthy brands worldwide. AXP, it's 7.55% of their portfolio. Berkshire owns 17.8 billion US dollars, and they own 18.5% of the company. What's interesting though, just a quick side note for American Express, he bought a lot of it in 1963 and a lot more in 2008 when the company was in a lot of trouble. And that's a technique in stocks. You just have to find areas where good companies have been battered massively, because you have to remember that at the end of the day, investors are irrational, that they tend to give in to fear, they get to give in to greed, and because of that, because of those emotions,
stocks normally go up so fast, or stocks normally go up so down, go massively drop down, which does not make sense anymore to the underlying fundamentals of the company, and that's what Warren Buffett did. If I so try to find out which companies have that as well. Try to find, should there be a crash next year, or should there be stocks that massively would drop? Try to think about the conditions that cause them to drop. If it does not change the company and the company is still doing well and the company just became cheap, it's your time to buy. Number 6. So this is our second consumption stock. First, we had Coca-Cola. Kraft Heinz Company, KHC. It's 4.3% of their portfolio. Berkshire owns $10 billion worth, and they own 26.7% of the company. The thing though about this, no, is the stock has been massively beaten down. So I don't know why Warren Buffett's holding on to it still, or he really believes that the company will turn it around. Will turn around. Please remember, the stock is down not just because it's being battered, but the company has gotten losses as well. So that's one thing you need to keep in mind. Or most likely, one of the things that's also protecting him is because he's well diversified. That the winners in his portfolio are doing well. That has protected. Even though Kraft Heinz is not doing so well, they somehow have a hedge based on the other stocks that they have. So it's either, history will tell, no, it's either Warren Buffett really believes that Kraft Heinz will turn everything around, or maybe he's just staying because the dividend yield of the stock, because of it being battered, is at 4.92%. Number 7 and last of the top 7 stocks that Warren Buffett owns is US Bancorp, USB. He owns 3.37% of it. They own $7.9 billion worth, and they own 8.5% of the company. So as you notice, same narrative. Banking stocks are cheap. Same narrative. He doesn't go away from his expertise. So comment below. I hope you guys are learning. Here are some key takeaways of this video. Number 1, similar to what I said and I've been hammering over and over, and what Warren Buffett has been doing, only invest in what you know and what you are good at. You don't have to be an expert in everything. You don't have to be like, for my personal investments, I'm not a big expert on mining, but I know a lot about consumption. I know a lot about property development. I know a lot about the companies that I love. That's why there are certain companies that have dropped, and as an investor, I love those companies. It allows me to buy them cheaper because I know the underlying fundamentals of those companies. Next one is this: be willing to wait until your parameters are hit. What's interesting about Warren Buffett is this: even though he likes a company, he wouldn't buy it until it becomes too cheap for him to ignore, and that should be your technique as well. Regardless of what your style is, only buy when it makes sense to you. Only buy when your signals are telling you to buy it and are telling you to come in. Number 3, buy stocks that are cheap and hold them for the long run. The only time you sell, in my opinion, is when you see the underlying fundamentals change, when the company is not as good as what were the initial conditions for you buying them as well. And lastly, and this is, I'm a firm believer in this, dividends work, especially if the company is amazing. Similar to what Warren Buffett is doing with Coca-Cola, the dividends just keep on increasing as the stock price is following. Think about this as your rental income. Like me, I have real estate, I own real estate, but my rental income is not from the real estate. My rental income is from the dividends. This is passive income for life. You can either have the choice that if you want something bigger, just reinvest the dividends, or if you don't want it to grow into something that's much, much bigger, the next thing that you can do is just basically use the cash flow. At least if you start using the dividends, it does not subtract from your capital. A lot of people want to take the money off from what they bought and what they sold from capital appreciation, but my personal suggestion, don't take out money from capital appreciation. Just reinvest capital appreciation, because the goal is to make your portfolio bigger. So are you guys learning? I hope you did. Comment, I want more. If you want this type of format, this is some sort of our learning format that I get to share the principles that I love from people who I follow, people that I know are the best in the stock market.
So I hope you guys enjoyed the video. I hope this is something that is helping you in your journey, because please remember this: you are never too old to learn. You are never too young to learn. Learning must begin now. Learning should be something that's continuous. People always stop learning when they graduate college. Don't do that. It always has to be an ongoing push towards learning, because at the end of the day, this, and how you process the information that you have is what's gonna keep you and is what's gonna push you to greater heights. Why? Because the more you can process information properly, the more you can decide analytically, the better your decisions, the better the decisions you will make, and the better financial and investment and business decisions that you make, the better you will be also financially. So that's why I keep saying, don't focus on how much you will earn. Focus on how much skills you have, because it's the skills that you have that will make you rich as well. People don't talk about that. People always talk about put your money here because it will double your money. I'm not about that. This channel is never about get rich quick. It's just about get rich right. It's about building the skill. It's about building the right information, because it's that information and that skill that will bring the money to you. So that's it for now. Marvin Germo. I hope this video helps you. Trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.